Good morning. This is Horizon's Middle East and Africa. Your top stories this morning. Asian stocks extended Wall Street rebound as investors look beyond politics to focus on tech earnings. Tesla and Alphabet report later. Kamala Harris says she has secured the broad support needed to clinch the Democratic presidential nomination after a two-day blitz of party leaders and donors. Plus, with stubbornly high inflation and a persistently weakening Naira, the Nigerian central bank is expected to hike today. Well, it's just gone 8 a.m. across the Emirates. I'm Joanna Versace in Dubai. Let's get you caught up on these markets because we did see a bit of a rebound in Wall Street yesterday. S&P ending the session about 1% higher, NASDAQ about 1.5% higher. Some love coming back into the tech stocks as we head into important earnings season for Magnificent Seven. Today, all eyes will be on Tesla and Alphabet. We also saw a decent rebound in semiconductors. That ETF was up about 4% yesterday in trading. Today, however, you can see the major indices, S&P futures, NASDAQ futures are tilted towards the red, down about 0.2 and 0.3% respectively. 10-year yields about 1.5 basis points lower. 4.24 is where we are at right now. So a little bit of a rally back. And then we're also keeping a close eye on the Indian rupee today. As you can see from this chart, well, today we're trading sideways, but if we zoomed out, you would see that the rupee is trading close to all-time lows. This as we prepare to get the first budget since the Indian elections later on this morning. We're going to be discussing that on the show. But switching over, I do want to point your attention to another terminal chart that we've been tracking very closely, and that is the price of oil. You may have missed it given all of the political noise over the last couple of days, but there's been a bit of a drop in the price of oil. So WTI futures are now sitting at a 5-week low. That drop came through the last couple of days. Again, concerns about China demand, and all eyes will be on those U.S. stockpile numbers coming out later today. So keep a close eye on the commodities complex. But for now, as ever, let's check in on how markets in Asia are faring. Avril Hong is in our Singapore studio. Avril.
Yeah, Jumana, we're seeing a bit of a mixed bag this part of the world with the tech shares rebounding, tracking the Wall Street climb as a bit of optimism trickles through ahead of the Mag 7 earnings and shrugging off for now some of the uncertainties related to U.S. policy, the sector rotation, the sky-high valuations that really hit tech stocks last week. So the TAIEX is leading the charge, but interesting to see what we're seeing in Japan assets there because the stock benchmarks, the Nikkei, as well as the topics have erased gains from earlier in the session as we see that climb in the Japanese yen. And this is coming despite some concerns about whether or not we're going to actually see a rate hike from the BOJ next week. And this has got to do with this environment amid the U.S. political uncertainty that seems to be favoring yen buying. That's what we're seeing in the Asia-Pacific today. Jumana.
Excellent, Avril. Thank you so much for the overview. All right, back to U.S. politics. U.S. Vice President Kamala Harris says she has secured the broad support needed to clinch the Democratic presidential nomination. In a statement, Harris says she looks forward to formally accepting the nomination soon. Earlier, she told supporters she intends to unite the nation and win the election for her party in November.
So in the days and weeks ahead, I, together with you, will do everything in my power to unite our Democratic Party, to unite our nation, and to win this election.
Bloomberg's Vonnie Quinn joins us now from Washington, D.C. Vonnie, good to see you as ever. It seems as though we can actually start calling Kamala Harris the presumptive nominee. What's the latest?
Well, Joanna, it's not fully done until she does formally accept that nomination, right? Anything can happen between now and the DNC, but effectively she is the presumptive nominee. At some point there will be that phrase being used. She already has her headquarters up and running. She took over the Biden headquarters, and as you can see, the branding is already there. It's just one word. It's Kamala. It's her first name. She wants to be getting out there. The whole Democratic Party wants her to be getting out there to have the nation start to get to know her, not as VP, not as somebody who used to be Attorney General of California, prosecutor in California, but as a potential president of the United States. To that effect, she's beginning her campaigning in Wisconsin tomorrow. That's obviously the site of the RNC. It's a swing state. She will give a stump speech in Milwaukee tomorrow. This as the president finally comes out of quarantine after he suffered COVID-19. He'll be back at the White House tomorrow. But we did hear from him today when Kamala Harris spoke to her campaign staff. He called in and essentially gave her his blessing blessing and said she had his entire support and that he would be, quote unquote, fully engaged, that he would be on the campaign trail with her, even as he continues to serve out his presidency.
Yeah, you know, I've been tracking the predicted odds very closely, and it's interesting to see that just in the last 24 hours, the race has really narrowed. So now, you know, per our page, we have Trump polling at around 48%, Harris at 46%. A week ago, that was 70% towards Trump, 30% Biden. So it is narrowing. How do we expect her campaign to look like? What is she going to do to win over the electorate?
Exactly. Well, first thing is she's going to have to pick a vice presidential nominee, somebody to run with her, right? And that's going to be important. If she picks a governor from a swing state, there have been so many mooted from Kentucky to Ohio to Pennsylvania, then that could help swing that swing state. Although data in the past show that that's not that relevant, in fact. She may also go for somebody that she has a very good personal relationship with. A couple of people have said that they're not interested, like Gretchen Whitmer and Wes Moore of Maryland, but you can rule anyone out. The FBI is currently vetting a whole range of potential picks. So there's that. There's also what she decides to talk to when it comes to these campaign events. You can be sure that she's going to address things like immigration, things like pocketbook issues, things where she's perceived to be vulnerable, at least from the point of view of a Trump supporter. She will address those. She will also go heavy on things like women's reproductive rights. She already started to do that today at her campaign headquarters to her staff. She has been very strong on that. And then she won't be afraid to go on the attack as well, because donors and the electorate will want to know, how does she actually plan on beating Donald Trump? And one of the ways, of course, is to attack him as he will attack her. She said today she had seen all manner of predators, fraudsters and cheaters when she was in her previous roles as Attorney General and prosecutor. And I'm quoting now, she said, "So hear me, when I know Donald Trump's type." She is not afraid to attack Donald Trump at the very lowest level.
And it seems like many within her party actually want to see her go out on the attack. Bloomberg's Vani Quinn, thank you very much for the overview. Well, the head of the U.S. Secret Service is facing new bipartisan calls to resign. Testifying in front of lawmakers, Kimberly Cheetle says she took full responsibility for the security lapses at the Pennsylvania campaign rally on July 13th, where former President Donald Trump was shot. The agency is facing congressional and independent investigations, as well as internal reviews. And Israeli Prime Minister Benjamin Netanyahu is in Washington on his first trip abroad since the Hamas attack on Israel that led to the war in Gaza. President Biden is expected to meet Netanyahu on Thursday. Meanwhile, Politico is reporting that the Israeli leader has also requested a meeting with none other than Donald Trump. So let's bring in Bloomberg's Paul Wallace, who leads our coverage of economy and government for the Middle East. Maybe let's just start with the purpose of Netanyahu's trip. Obviously, he was invited to give this big speech to Congress. But what do you think he's trying to achieve?
Hi, Jumana. I think he will certainly be there to try and shore up support of Israel, given everything that's happened with the country since October the 7th. He may be trying to get more robust measures against Iran, for example, from the United States, and commitments towards that end, given how Israel is effectively battling several of Iran's proxies at the moment. He'll certainly use it to, he'll certainly try and exploit the situation for domestic political purposes. He has said more than once that this will be the fourth time he's going to address Congress, which is more than any other leader in history. He will actually overtake Winston Churchill to become the statesman who's addressed Congress the most times, and he's wanting that to be put out there. So he's very much hoping it also shores up his position at home, where he's facing weekly protests, mass protests, and divisions within his own government. So it's a combination of those things.
Yeah. Yesterday we were talking about how he was likely to feel emboldened given some of the U.S. political developments of the last couple of weeks, but at least there's more certainty now. Looking ahead, though, again, the race is quite tight between Trump and potentially Harris. Do we have a sense for how U.S. foreign policy may differ towards Israel under a Democrat president versus a Republican president?
That's a big question. And I think at the moment the consensus is that Harris would in many ways be the same as Joe Biden. Obviously, if she gets the nomination, we don't know who her foreign policy team would be and whether she would stick with some of the people who have been at the forefront of Biden's efforts towards Israel and the Israel-Hamas war, like Blinken and Jake Sullivan and those ones. But at the moment, people think there'd probably be continuation on that front. Trump is obviously a different matter. He knows Israel very well from his first term in office. He's a bit of a tricky character to read on this front. In some ways, he's given Israel backing to carry on with its war, which is what Netanyahu wants to do until, as he says, Hamas is destroyed. And he said that Trump's essentially said that Israel must do what Israel must do. But at the same time, he's also blamed or come very close to blaming Netanyahu for not preventing the October the 7th attacks and said that they happened under his watch. And he's also told Israel to get on with it, essentially implying that he doesn't want this war in Gaza to continue. So there is a possibility that if Trump comes to power, he could actually be more assertive on Israel and put more pressure on it to wind down operations in Gaza. We'd have to see, but I think Trump is less predictable than Harris.
And of course, he would be extremely hawkish on Iran, which would play well into what Israel are trying to achieve the next couple of days.
Yes.
It'll be fascinating to see. Paul, thank you so much for joining me today. That was Bloomberg's Paul Wallace. All right, there is plenty more coming up on the show. This is Bloomberg. We'll be back in a moment with the latest on markets. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Well, stocks in Asia are extending a Wall Street rebound as investors look past U.S. presidential politics, albeit with a little bit of a consternation about what's going to happen in the months ahead and towards the start of the tech earnings season. So lots to digest here. Let's bring in Omer Chowdhry, Head of Global Fixed Income and Multi-Asset Strategies at Aditum Investment Management. Given your wheelhouse is fixed income, I'm just going to start off by asking you what you think is driving fixed income markets here. Is it U.S. politics or is it macro?
I think it's a combination of both. There's been a lot of push and pull factors. If you look at the yield curve, it's being driven mostly, I think, by the macro, which has been weakening. Labor indicators are indicating that the U.S. labor market is weakening, and that's emboldened the Fed to start talking about rate cuts. But then we have the whole political scene going on in the U.S., and if you looked in June, the market was still a bit calm, and it was looking completely towards the macro, and suddenly we got the first debate, and that kind of threw a wrench in the whole thing. And then since then, there's been a lot of uncertainty in the air, and so I think it's both factors driving yields up and down, and so rates volatility has been elevated.
Well, per your analysis, you're long fixed income. Even at these levels, we've got the 10-year yield sitting at 4.23. First of all, where do you think we get to? First question.
As a number, I think in the short term, we'll be driven mostly by the macro. I think that the Fed is watching the U.S. labor market quite closely, and the macro will probably drive yields lower. As a number, it's hard to pin where the 10-year can end because there's so much volatility, but I think we have probably another 30, 40 basis points lower before we start to look to trim our duration exposures in our portfolios.
Okay, so on the flip side, what about the upside risks to your long duration call? And here I'm speaking about all of the political topics that have come up the last few weeks. We talk about fiscal profligacy. We talk about the steepening of the U.S. yield curve. We talk about tariffs being inflationary. How do you hedge against that if you're long fixed income?
So I'm not sure there's any clear evidence that tariffs are inflationary, number one. But secondly, the fiscal deficit problem is a long-term problem that's not going away. It's a perpetual issue. And time again, the market's going to be concerned about that, and maybe we'll get a spike in yields. I think in the short term, the Fed will be focused more on the macro, but then, once this duration play is over, I think the long end becomes very vulnerable to the fiscal situation. I think going into next year, that's probably going to be center stage.
Are you thinking of the impact a potential Harris presidency could have on yield curve or the other instruments that you look at versus a President Trump? To what extent is that going to be factored into how long you hold on to these trades for?
Yeah, I think that with the Harris presidency, and probably we won't know until the very end how this pans out.
Because it's very tight now.
And I think it could be more or less business as usual, continuation of Biden policies. I think tariffs could still be in the cards. Maybe Trump ramps them up a little bit more. But in terms of the fiscal deficit situation, I think it's more pronounced with the Trump presidency because he has all this infrastructure spends that he wants to do, cut entitlements somewhere else. But I think that the problem still remains, and the long end is vulnerable to that.
Yeah, let's talk about the front end because we're pricing in now around 60 basis points of cuts by the end of the year. And the last time we spoke, you said that you were expecting between 2 to 3 cuts. So that's exactly 60 basis points. It does feel now that we're almost priced to perfection. And if the Fed did end up cutting 3 times between now and the end of the year, it probably is a sign that the data is deteriorating even faster than we thought it would.
Yeah. I think the Fed obviously knows a lot more about the economy than we do, and maybe they're seeing something that we aren't seeing. And some of the indicators in the labor market are backward-looking. But the claims data is kind of worrying and showing that the labor market is cooling a lot faster than we expect. It is priced to perfection, but we haven't really seen a full bull steepening of the curve yet. I think that's still in the cards, and I think that the front end has to come down a little bit more from here.
Yeah, so where does that leave the broader credit market?
Credit has been doing really well, broadly speaking. Spreads have been trading near 5-year tights or multi-year tights. That's been driven by supply-demand imbalances. A lot of credit funds holding cash, not enough supply to capture that. Also, the outright level of yields has been very attractive, so that's been driving spreads tighter. We are worried about the level of high-yield spreads. There is a risk that they can widen from here if the macro deteriorates from here. IG, I think, is still going to be okay.
Yeah. A final question for you, perhaps slightly less into your wheelhouse, but still important for markets. We do have the beginning of the earnings season as far as tech is concerned. And the big theme for equity investors has been that rotation taking place out of the large mega caps into some of the small caps. How do you see that panning out? And to what extent do you think these earnings that are going to come through today, we've got Tesla, Alphabet, next week, the other ones, is going to drive sentiment?
I think these earnings are very critical and important, almost more than the previous couple of earnings that we saw. This rotation or this trade about small caps catching up to large caps, came to life a few times, then went by the wayside time and time again. This time there's a bit more, juice to it because small caps need a rate cut story. And rate cuts are getting traction, and we've been waiting for that, and we always thought this was going to be a second-half trade. I don't think it's a full rotation out of large cap and AI and tech stocks into small caps, but it's something that you have to look at to add to your portfolio. Never count out the mega cap techs because time and time again, they post pretty good numbers, raise guidance, and then the market is all excited again. So we'll have to wait and see how the numbers pan out. Yeah, very good advice. Never count them out. Omer Chowdhry, Head of Global Fixed Income and Multi-Asset Strategies at Aditum Investment Management. Thank you for joining our show. Also coming up, Qatar Airways is in talks with Boeing and Airbus on new wide-body planes. We hear from the CEO next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersechi in Dubai. Emirates President Tim Clark is predicting the Boeing 777X aircraft won't enter commercial service before 2026. The years-long delays of the wide-body jet have forced Dubai's carrier into some costly changes, but the first trials of the aircraft are finally underway. Speaking to Bloomberg, Clark said he wants to stress test the General Electric-made engine under the harsh weather conditions in Dubai before taking delivery of the jets. Meanwhile, Qatar Airways is in talks with Boeing and Airbus on new wide-body planes. The CEO, Badr Mohammed Meer, told Bloomberg that the major order is likely to come early next year after a deal is finalized.
It's a big order, so we want to take our time in evaluating the bids or the offers that we received from Boeing and Airbus. We're busy evaluating both offers. We're in continuous discussion with both manufacturers, and we're aiming to conclude the deal, the decision by, I would not say in this year, maybe in the beginning of next year.
Where's the delay? Like, you're evaluating the offers, so you've got what you need, or are you still waiting for what you need?
We got what we got. Partially, we got what we need. And the offers, but we asked for something different this time from both manufacturers, and this is where we're spending some time in the discussion with them.
In terms of what that means in terms of your ability to deliver product and control costs, what effect will that have in terms of the bottom line?
You know, by the end of the day, we're talking about numbers. Last year, we recorded, again, the highest profit in the history of the company.
Yeah.
This quarter, we are recording the highest profit in the history of the first quarter in the company. Yep. We're talking about percentage-wise triple digits compared to last year. So this is a proof that we're looking at revenue plus looking at reducing cost and cutting costs wherever it is necessary, as long as it will not affect the customer experience.
I've got one final quick question. I'm going to get told off for this. Rwanda Air and some of the South African airlines and other areas. Talk me through what we're going to see in terms of deals.
You know, I was hoping to announce our investment in the South African airline in this interview. However, because of some final stages.
Which name are we talking about?
Again, it's one of 3 companies.
Yeah.
And I promise you will be the first to know.
Well, that was the new Qatar Airways CEO, Badr Mohammed Meer, at the Farnborough Air Show, speaking to Guy Johnson. But it is not just U.S. tech earnings we're watching out for. Let's turn to some of the earnings we're watching out for over here in this region, starting off with some of the banks Wednesday. So that is tomorrow, actually. For a second, I thought we were Wednesday today. We get first Abu Dhabi Bank and Al Rajhi. Thursday, we get Saudi National Bank. And just to give you an idea of what we're watching out for, FAB, interesting one to watch always. Loan volume is in focus. People are going to be watching out for some of the lending that goes through. Cost of risk has come in higher in the last quarter than what they had penciled in. Interest and non-interest income also, they took a bit of a capital gains hit from the Egyptian devaluation, the Egyptian pound devaluation. So again, all of those things are watching out for FAB. Switching over to Al Rajhi, always important to watch there because they are actually Saudi's largest bank by market cap and the biggest Islamic bank globally. As ever, we're going to be watching out for NIMs, so the impact of the yield curve and what that has meant for their overall income, interest rate cycle reversal, what the start of the Fed cutting cycle could potentially mean, and then loan growth as ever as they've looked to shift their mix towards corporates away from retail. And then finally, SNB also in focus. We've got the new CEO in place, Tariq Al-Sadhan. His term started in May, so any guidance from him on the strategy of the bank is going to be watched out for, as well as the potential composition of loans and, again, their exposure to interest rates. All right, also coming up, we're going to be talking about the India budget. Stay with us. This is Bloomberg. This is Horizons Middle East and Africa, our top stories this morning. Asian stocks extend a Wall Street rebound as investors look beyond politics to focus on tech earnings. Tesla and Alphabet report today. Kamala Harris says she has secured the broad support needed to clinch the Democratic presidential nomination after a 2-day blitz of party leaders and donors. Plus, with stubbornly high inflation and a persistently weakening Naira, the Nigerian central bank is expected to hike today. Well, it's just gone 8:30 a.m. across the Emirates. I'm Joanna Versace in Dubai, just getting you up to speed with how some of these markets are faring. We're paying a close attention to the tech earnings that are going to be coming out over the course of the next week. Today, Tesla and Alphabet kick things off, and we did see a big rebound in tech stocks yesterday. The Nasdaq up more than 1.5%. Also, a big rebound in semiconductor stocks, their best day since June, up more than 4%. Today, the futures are leaning slightly negative, though. We've got the S&P tracking about 0.2% weaker, Nasdaq about 0.3 weaker. 10-year yields about 1.5 basis points lower. Remember, the front end of the yield curve is pricing in 60 basis points from now until the end of the year in terms of rate cuts. So the bar has moved a lot higher. And then also the U.S. dollar is on the back foot once more, has dipped in the last couple of days as the markets sort of digest the developments in U.S. politics and what a potential Harris presidency could mean for USD continuity candidate. Switching over to our main terminal chart of the day, and that is oil, because it may have slipped beneath the radar here. We've seen quite a big drop in the price of oil the last couple of sessions, actually down 3% in the last week. We have Brent tracking around $82, and we have WTI at around $78. Futures sitting at a 5-week low. Again, concerns there around Chinese demand, and also keeping a close eye on U.S. stockpiles later today. Let's check in on how markets in Asia are faring as well. Avril Hong is in Singapore. Avril.
Yeah, Jumana, Asia tech shares, as you mentioned a short while ago, are rebounding, but it's looking pretty flat elsewhere in the region, including in India. Take a look at where the Sensex and the Nifty are. And this is with an eye ahead of the budget speech from the finance minister, Kamala Harris. This will be her first budget speech under a new coalition government. Traders have been booking profits in sectors such as real estate. So we're seeing a bit of softness in Indian equities. We're also watching very cleanly about whether we're going to see further fiscal consolidation from India. That could be a further tailwind for India bonds. The 10-year yield sitting at roughly the 6.96 level. The rupee also in focus, yesterday hitting a fresh record low. This has more to do with the moves in the dollar, but recovering some lost ground today. Jumana.
Yeah, so let's talk more about that Indian rupee. Avril, thank you very much for the overview. So for more on that, Menaka Doshi, Bloomberg senior editor for India, joins me now from Mumbai. We've been tracking, obviously, the price action within the rupee close to a record low, but we've got the budget coming up in India today. So what is going to be the focus, and how is that likely to impact markets?
Well, good morning, Jumana. Just as Avril pointed out, this is the first budget being presented by the third government headed by Prime Minister Narendra Modi. And to that extent, you can expect this budget to be an articulation of what this government hopes to achieve over the course of the next 5 years. And that could cover a wide variety of things, from infrastructure building to more production incentives for manufacturing, AI, the impact on jobs, rural housing, a variety of social welfare schemes, and also trade relationships, exports and investments from China. But those are the longer-term measures that one can expect in today's budget speech. When it comes to the more immediate priorities, the Finance Minister Nirmala Sitharaman is faced with an economy that's growing in a divergent fashion, where not everyone is benefiting from this world-beating growth. That's the reason why her government has come back to power with reliance on two key regional allies. So there is a demand for more welfare spending to boost consumption in the nearer term. There are also demands from those allies that have helped Modi make government for this very third time. These are the additional spending impulses that the finance minister sort of faces. She also has some additional money in her hand versus what was estimated earlier in the year. Whether that will be used entirely to be spent or to save some from the budget perspective and reduce the fiscal deficit is what we'll be watching very closely in today's budget.
Well, we spoke about the price action in the Indian rupee. I just wonder what else markets are looking for in today's budget.
Well, any additional spending measures, Jumana, will, obviously impact a wide variety of companies, whether they cater to rural consumers or urban consumers, and that will impact their stocks. So the markets will be, of course, watching the big picture of the budget. They will also be watching to see if there are any tax changes that allow for the middle class to spend a little bit more, and also specifically any tax changes on the capital gains front, whether they impact equity or debt investments. Now, the government, India's market regulators, and also the economic survey presented by the chief economic advisor yesterday have red flagged, a heightened speculation in the F&O market. And so the market will also be watching to see if the budget seeks to address any of that today.
Yeah. Thank you so much. It's going to be a big day. Menaka Doshi, Bloomberg senior editor for India. Thank you. Well, back to our top story now. U.S. Vice President Kamala Harris says she has secured the broad support needed to clinch the Democratic presidential nomination. Harris released a statement saying she is proud to become the party's nominee and is looking forward to formally accepting the nomination soon. Our next guest is an adjunct senior fellow at the Center for New American Security and the founder of Geoeconomic Risk Advisory Ziemba Insights. Rachel Ziemba joins us now from Vancouver. Rachel, good evening to you. Let us just start with the main top story that's been dominating the news waves the last 24 hours, and the fact that it looks as though Kamala Harris is going to be the presumptive nominee for the Democrats on the presidential ticket. Let me just turn your attention to markets here and how you think markets will interpret Harris on the ticket.
Sure, you're right, Jumana. Pleasure to be with you. And, it's been a real sea change in the last 36 or so hours. But I think that scenario that some people were worried about of chaos in the Democratic Party is not here. So I think what we're seeing in the markets is maybe a reversal of some of these, Trump trades, the sort of weaker dollar. And I think if anything, that puts our attention back on the strength of the U.S. economy, the strength of the global economy, and on the Fed, and a little away from what is likely to be a tight race, a long race, right, as we sort of move towards the November election. So for oil markets, for example, I think we're sort of back to, these questions of will OPEC Plus really be able to add the supply that they've promised? So I think if anything, the tightness of the race means it's back to the fundamentals.
So since you bring up oil markets, I'm going to take you there now. We were tracking the price of oil, and it's sort of under the radar, dropped a couple of percentage points in the last couple of days. A lot of that, could be short-term factors, positioning, and the likes. But I think, one of the big questions out there is what Chinese demand is going to look like and how the demand in the second half of the year is really going to pan out. What is your view as to where we settle up in the energy complex?
Yeah, so I think you've got it spot on. This question of Chinese demand. We've just had the third plenum, and we had monetary easing in the last 24 or so hours. That monetary easing, I think, is more about putting a floor under the property market weakness, not really about big support to demand. And when you look at it, Chinese electrification plans and general sluggish demand is going to mean China's not the same support to global fossil fuel demand as it was some years ago. So I think we're going to see this sort of wider range trading. We might see it moving a little bit lower, especially if markets think that OPEC will get closer to, closer to actually easing up on its cuts. But I think if anything, that in that circumstance, we'd see some covering, and we might see it moving back into the 80s. So I think, I see this mid-70s, mid-80s range for the next couple of months, absent some sort of major shock. And I'm really watching on the supply side, Russia, right? We saw a couple weeks of lower supply. And a lot of that has to do with meeting their own domestic demand. But that question mark of, is that by design? What's going to happen with Ukrainian bombing of Russian refineries? And also, what's going to happen with the Venezuelan elections next week? Now, I don't think that's going to move markets in the short term, but it is going to be something I think important over the medium term if there's some sort of power sharing agreement that leads to an easing up of sanctions.
So you say that you're keeping a close eye on the supply outlook. What about U.S. supply and the fact that former President Trump has said, quite openly, drill, baby, drill. He wants to turn the pumps back on again. U.S. production is already close to record levels, but does that increase even further under a potential President Trump should he return?
Well, I think there's an inconsistency in his rhetoric because he says drill, baby, drill, and we're going to bring gas prices down for the consumer. And I don't think you necessarily get those two things together, right? Now, of course, there's campaign pledges. I mean, as you point out, U.S. production is quite high. And I think that has a lot to do with the fact that OPEC Plus has been trying to manage the markets. And this range that, we've been trading in is quite attractive to U.S. producers, even though some members of the energy sector, have been concerned about Biden administration policy. More generally, I think if anything, Trump administration policy might do more to boost medium-term American demand, which might then support supply. But I think if anything, short-term, next year, I'm not expecting a lot of major changes. But I do have my eye on this permitting reform that Joe Manchin and Senator Barroso put out in the Senate earlier today. That, I think, could be important longer term for production, not just of oil, but also of critical minerals and mining dynamics. And a lot of those critical minerals are not actively traded, right? So there's not as much great market moving, but that could be quite important for electric vehicle and battery supply chains. So it's something I have my eye on. It's probably a long shot to pass, though.
Rachel, one of the few areas of foreign policy where there is bipartisan support is this hawkishness on China. It started under the administration, the Trump administration, continued under the Biden administration. Obviously, President Trump has talked about bringing back tariffs, very high tariffs onto China. But I thought it was interesting that this morning that within China, many state-backed news outlets, social media users are now portraying Kamala Harris as, in their words, a candidate who doesn't present a major threat to the world's #2 economy. Are those comments valid in your mind, or should we expect that Kamala Harris would espouse much of the same policies that Biden administration did?
Yeah, I think she does on this area of China and trade represent continuity. Now, you're right. You're completely right that tariffs are bipartisan policy. What I do think is a little bit different between the two camps is whether they're targeted but extensive, which has been the Democratic approach, or whether it's across the board, and also how much at least rhetoric is there towards trading with partners, like-minded, developed economy democracies, right? And so I think tariffs would continue that on. We might see her sort of co-investing with partners in Asia, Europe, in the Americas in a way that might be less clear for Trump. I think from the Chinese perspective, it's in their interest to highlight that whoever the president is, they can manage it, right? If anything, China's focus on self-sufficiency, the domestic part of the dual systems, all of that, goes towards trying to point to their resilience. The Chinese officials were on the record as, preferring Biden to Trump, non sequitur there. And I think that's partly something of predictability of policy. So I would see Harris continuing on with targeted measures, but also continuing on with industrial policy, and maybe being the kind of administration that also still tries to find some few areas where they can work with China, right? We saw the Biden administration reset relations with China last year. They're mostly just keeping talking rather than any major deliverables. But still, I think it may be something more where China thinks in the short term they can talk to the U.S. and over the longer term build up their own capacities. And they're really focusing on this continued economic challenge at home.
Rachel, going to leave it there as ever. Wonderful to speak to you and to get your insights. Rachel Ziemba, Adjunct Senior Fellow at the Center for a New American Security and Ziemba Insights founder. Thank you. Also coming up, Nigeria could be ready for its last rate hike of the year as stubborn inflation and persistent Naira losses weigh on the economy. The details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Now, let's turn our focus to Nigeria, where stubborn inflation and persistent Naira losses call for one final rate hike. Bloomberg Economics expects the central bank to raise rates by 100 basis points today. The governor, Olayemi Cardoso, has repeatedly stressed that policymakers are committed to defeating inflation.
The Monetary Policy Committee is determined to ensure that they put inflation under control.
So that could mean another hike potentially.
Well, numbers driven. We do need to see what the numbers say, but like I have said, it's moderating.
For more on this, Bloomberg's Africa correspondent Jennifer Zabazaja joins us from Johannesburg. Well, you spoke to the governor about a month ago, pressed him on whether they're going to go for another interest rate hike. What are we likely to see from them today, given the recent uptick in price pressures?
Yeah, Jumana, and I think it's important to note that we did speak to him before we got those new inflation numbers last week, which put inflation at a 3-decade high for Nigeria, over 34%. And so what we are hearing from a median estimate of Bloomberg economists is that, yes, we will see a rate hike today when we do hear from the MPC. It will be potentially one of the last ones that we see in 2024. The median estimate says it will be 75 basis points, the hike bringing in the interest rate to 27%. And potentially the upside is that inflation could be taming and cooling off. We've spoken with Bloomberg Economics, our Africa economist here, Yvonne Mango, who does believe that this 3-decade high inflation percentage that we saw in June is potentially the peak, and what could help things moving forward is the fact that maybe we do see the Naira begin to stabilize, but then also maybe we do begin to start seeing some inflows into the country. And so, yes, when we did speak to Cardoso, he was very optimistic, but the question will be, what is the messaging that he actually gives us later today?
Yeah, it seems to me that they've got two problems going on here. You've got the weakness of the Naira, and you had an upside surprise to inflation. So in all likelihood, they will have to surprise the markets from a hawkish perspective at this next meeting. Are we likely to get any clues as to the path ahead?
Well, and that's the interesting thing, Jumana, right? Because we are seeing some economists who are saying, yes, this will be the last hike that we see in 2024. But then if you look into some Goldman economists actually believe that they think the CBN should continue to stay the course on this hawkish side, just given what we are seeing with inflation. The upside, though, is that we have seen crude output continue to rise. In June, it was actually higher than it had been since February. And when we spoke to Cardoso a month ago, he did believe that the Naira is going to be stabilizing where it's at right now, and that dollar inflows will potentially help ease some of the inflationary pressures. But, you know, the question really will be, what is the messaging that they give, especially if we take a look at what's happening across the world as we do see a lot of other central banks begin to start easing. Is the Central Bank of Nigeria in a position to do that, and what impact will that have on the economy? So we're going to pay close attention to what Cardoso and the rest of the committee decides on that and what that means moving forward.
2 p.m. local time is the decision. Jennifer Zabazaja, Bloomberg's Africa correspondent. Thank you. All right, also coming up, U.S. stocks are rebounding after their worst week since April, with tech earnings now in focus. Tesla and Alphabet are the first to report today. We have the preview next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bursechi in Dubai. Now, Alphabet will be one of the first of the Magnificent Seven to report earnings this quarter. Analysts' estimates expect Google's parent company to see a sales boost from its cloud unit and a recovery in core search business. Investors are also on the watch for details of a revenue boost from AI. And Tesla is also expected to report its second quarter results today. Analysts will likely press Tesla on the progress of its plans for Robotaxis. Investors will also be looking for updates on the company's future plans as it juggles an increasing number of projects. So for more on this, let's bring in Bloomberg's Asia transport correspondent Danny Lee in Hong Kong. Tesla's already reported second quarter sales, which were 14% lower than the previous year. So how does that guide what we're going to get from the company today, out of the results today?
Yeah, Wall Street is expecting second quarter revenue of $24.63 billion and an adjusted EPS of 60 cents a share. But the backdrop to that, as you said, is the sales, which for the second quarter in a row was down on a year-on-year basis. And we didn't see much color given or explanation as to the reason and the drivers behind that at the start of the month when the figures were released. So I think investors will be looking closely for any particular reasons as to why this has been the case. But clearly, when you look more forward, investors are also going to be looking for more details, hopefully, on a more affordable Tesla model that could drive demand and boost sales, and also this Robotaxi. In a few weeks' time, we were expected to hear more on a Robotaxi, but that, Elon Musk, as we reported, has been delayed up until October, according to a Bloomberg scoop. So the backdrop to that is these things are not necessarily going to drive earnings over the next several quarters necessarily, but more details about the road ahead, and particularly as more criticism Tesla faces of trying to revive and refresh what is currently a very stale lineup. But as you look at the share price at the moment, it's flat, slightly up on the year, and it was down as much as 43% a few months ago.
Yeah. Pretty remarkable. I was just looking at the price action in the stock. It's up 40% since the beginning of June, so a real whirlwind for Tesla stock. Bloomberg's Asia transport correspondent Danny Lee in Hong Kong, thank you. We'll be keeping a close eye on Tesla results later today, in addition to Alphabet, as we keep monitoring some of the earnings that are coming out of the U.S. Later this afternoon. But that is it for our show today. Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.